For the last couple of years, right, the Magnificent Seven have just been the undisputed champions of the stock market. But as we start looking towards 2026, well, the story is getting a whole lot more complicated. So let's dive into this health check on the market's most dominant players.
So just how dominant have they become? This number pretty much says it all. Over 40% of the entire U.S. stock market is now concentrated in just 10 companies. And that group, it's almost completely defined by the Magnificent Seven. We are at a level of market concentration that is frankly, truly historic.
And that record concentration, well, it brings us to the big question we're digging into today. I mean, after a run like this, what happens next? Because let me tell you, the pressure is building from every single angle, from new technologies, from global regulators, and from deep within the market itself. The first, and maybe the most powerful force here, is of course, artificial intelligence. It's been the primary growth engine for these companies, no doubt. But it's also the source of some of the biggest, most nagging questions they're facing heading into 2026.
Now, what's so interesting about this is how perfectly it captures the central conflict. The bull case is undeniable, right? AI is transformative. But as the analyst Benedict Evans points out, that's exactly the kind of world-changing tech that has historically caused massive investment bubbles. So the question for 2026 isn't really whether AI is real, it's whether the market has just gotten way, way ahead of itself.
And beyond all the bubble talk, the AI build-out has these enormous real-world costs. We're talking about a global arms race for hardware, for minerals, for manufacturing capacity. Data centers are causing these huge spikes in energy and water consumption, creating brand new bottlenecks for growth and pushing our utilities and infrastructure to their absolute limits. This isn't just a digital revolution, it's a physical one, and man, is it incredibly expensive.
In this quote, it just brilliantly illustrates another risk that's less about finance and more about function. As companies are rushing to integrate AI, the risk of what are basically AI mistakes or hallucinations, it just keeps growing. An agent trying to optimize some code could just as easily delete an entire project by accident. These aren't malicious attacks. They're well-intentioned AIs that simply lack human judgment, and that's a totally new and unpredictable operational risk.
So at the very same time that these companies are navigating this whole AI boom, a global regulatory antibody is forming. Governments, especially in Europe, are really moving from just talking to taking action. And they're using powerful new laws to challenge big tech's dominance.
And the fines are getting serious. I mean, really serious. This was the penalty the EU slammed Apple with back in 2024 for anti-competitive practices in the music streaming market. They basically argued Apple was unfairly favoring its own services.
And that was just the start of it. In April of 2025, Apple got hit with another €500 million penalty. Now, what's important here is that this was the very first fine of its kind under the EU's powerful new Digital Markets Act. It was a huge signal that regulators were not afraid to use their new tools.
And it's not just Apple, not by a long shot. In September of 2025, Google was hit with its own multi-billion euro fine for anti-competitive practices in its ad tech business, which is, a core part of its empire. The message from regulators is crystal clear. The era of light touch oversight is over.
Okay, so what you're seeing here is how this battle is being fought on multiple fronts with totally different results. In the US, Meta actually argued successfully that the FTC couldn't prove it has a current monopoly, and they secured a major win. But in Europe, it's a completely different story. The EU is probing Meta's AI policies on WhatsApp, while Google and Apple are just facing this barrage of fines and investigations. This is a truly global fight with diverging outcomes.
So, if you're an investor, you got to be asking, how in the world are you supposed to navigate this environment? The sheer size of these companies is forcing a really fundamental debate about the best way to invest in the market today. And that brings us to this big debate between two core strategies. On one hand, you've got market cap weighting. That's the standard approach, where the biggest companies get the biggest share of an index, like the S&P 500. It's what's been fueling the Mag 7's incredible rise. On the other hand, there's equal weighting, which gives every single company in the index the exact same slice. Think of it like a pizza, right? Market cap weighting gives the biggest slices to the most popular toppings, but equal weighting gives every topping the exact same size slice.
To put the current situation into perspective, just look at this. Under the current market cap structure, the technology sector makes up a staggering 35% of the S&P 500. In fact, a single Magnificent Seven stock like NVIDIA now has a weight equal to the entire consumer staples and energy sectors combined. That's just how skewed things have become. And history has a pretty stark warning for us here. An analysis from Man Group looked at periods of extreme size dominance, just like the one we're in now. And their finding is, well, it's pretty clear.
Whenever the performance gap between the absolute biggest stocks and the next tier of large stocks has gotten this wide, the biggest stocks have never gone on to outperform over the following 5 years. History suggests a reversal is coming.
So after running all these tests, what's the final prognosis? What's the verdict from this health check on the Magnificent Seven as we look ahead to 2026?
Well, the diagnosis is complex. The patient's vitals, their core earnings and growth, which are being powered by AI, are incredibly strong. But when you apply that external stress test of regulatory pressure and valuation concerns, they really start to show some strain. So the outlook is for continued volatility, with a very high probability that market leadership is going to need to broaden out beyond just these 7 names.
And this leaves us with the ultimate question for 2026. Will this handful of companies continue to defy gravity and prove that, this time really is different? Or is that historical pattern of rebalancing already kicking into gear? The answer to that is going to define the next chapter for the entire market.